Hello traders, it is Thursday the 21st of December 2017. It's 8:02 a.m. Chicago time, 9:02 Eastern. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the lead is by the indices, the equity indices. The Russell's ahead of the pack, up 7.2 points, up 0.47%. The Russell closed near lows yesterday and is trading near highs. The Russell continues to be in a sideways trade over the last couple of days, as is the S&P. And the S&P follows that, up 7.5 points, up 0.27%. The laggards this morning at Bitcoin futures. I won't bother quoting the CME product. It's just too thin and too wacky. Still, the SIBO Bitcoin futures, the XBT F8 January, down $330 or 2%, followed by crude oil, the British pound. So overall, the market sentiment looks like it's moving to risk allocation, and that's the mood this morning. We have to take that into account into our trading context for today. Overall, it looks like the tax plan is the tax cut deal is moving forward, and it's slated to hit the president's desk here, I think, by Christmas. Not sure when he'll have a signing ceremony, but this is a big package, and therefore it'll probably be something that everybody's going to pay attention to. We're getting a slew of companies coming out and announcing that they will be providing employees with bonuses and increases of wages up to $15 per hour, which is great. So they're standing behind the tax cut. That's the kind of response we want to see as a country, and that's likely to be reflected in our equity index trading as well. Other than that, not much to talk about. The crypto volumes yesterday exceeded for the first time the New York Stock Exchange turnover, passing $50 billion per day in trading. That is higher than the New York Stock Exchange turnover. So they're definitely taking a bite and are getting some staying power, in my opinion. So that's great to see. I'll let you check out the rest of the news. No sense in me regurgitating it. We did get GDP this morning, and Philly Fed and so on. Today, what is likely to impact us going forward? We're getting Eurozone consumer confidence advance for December, expecting 0.2. That comes out at 10 Eastern, 9 Central, U.S. At the same time, we're getting the leading index, U.S. leading index for November, expected at 0.4. The prior is 1.2. Pay attention to this number. Again, expecting 0.4. Prior is 1.2, and that's at 10 o'clock. Natural gas at 10:30, and that's about it for today as far as announcements. Let's have a quick look at what we expected yesterday. And what we see from yesterday is that the markets opened and dropped right off. Totally not what I anticipated as the participation here this morning. Yesterday morning, the expectation in the setup was for a likely dip and then push higher, and the market did not agree with that at all. So I've talked about this before to those who've been around a while about the Monty Hall problem, and getting a surprise like this when Hypo 1 has something, Hypo 2 has something, Hypo 3 has something, and so on. or scenarios or trade plans for the day, whatever you want to call them. When we get a surprise like this, it is a big opportunity. I'd like to see that the market's confirming areas that I'm interested in and is behaving in a way that I had predicted, of course, just like everybody else. It's easier for me to bite into something with size when I see it complying with with my expectations. However, when the market does something completely different, it's not an indication of failure. What it's an indication of is surprise. And there's opportunity and generally volatility and surprise. So with this plan here, this is what we would normally expect this product to do. And this is what we've seen over the last year and a half or so. It just relentlessly balances. If it drops, it dips, and then it pushes up. Yesterday we had a gap up just like today. So we expect it to push up. We haven't tested 2,700 yet, a century figure. Roll and expiration is behind us. So the path is clear, and there's lots of good news. So it's an expectation based on the context that we see. We didn't get this at all. This didn't play out at all. So there was nothing for me to do in the morning. The secondary expectation was for a push higher. Remember, we closed the overnight session strong. We had a strong uptrend. And so we expect that to continue, and then for the market to rebalance. So I'm expecting an impulse down, and then the market to start pushing through that gap zone again and potentially retesting that 2683 area, and maybe even pushing to 2677.50. But wasn't looking for that much movement yesterday, so I expected it to get stuck and build a profile. So the expectation here is for a profile that looks like this into the end of the session. Here's what we actually got. So we're still in our prior day's review. This is what we actually got. We got a drive, an OTD down, a drive right back down that consolidated. It pushed to 2683, which is a double bottom, and it's a triple with the overnight session. Pushed 2683. Nothing for me to do here. No trading. Not seeing a setup. I'm not interested in jumping on a fast moving train or anything like that and get my arm ripped off. So I have to wait for retracement in the direction of the impulse, and it shows up here. Okay, and so there's opportunity here in the order flow. We see that we have a fair number of offers. This area coincides with the closing swing of the prior day. VWAP, it's ahead of mid. It's against the OS low. So it gives us an opportunity for at least a break of this day-to-day double bottom. And it gives us a chance to continue and take out the overnight low, which was right here the prior day. So I'm looking for at least, on this move down, I'm looking for at least 5 points if I can catch it early enough. And so there it is. It starts to move forward, and then we get the extension. So what we have here is a typical impulse, pullback, push, pull, consolidate, and then an attempt to push higher. This is a very typical, to many of you, this will look like an inverted head and shoulders formation, but generally that's what we see. We see on a market that's fairly strong, we see inverted head and shoulders type of formations. I don't really believe in patterns, but in a down market, we see regular head and shoulders pointing down. Yesterday just couldn't muster up the energy to keep going higher, and it did so overnight. Okay, that's what happened yesterday. All right, here's the overnight session. So we're going to finish this review and go to the current as we get sophisticated with our cinematography here. The overnight session, completely dead, just absolutely completely sideways. And then the European Open is around here, right? 1 a.m. Chicago time. European equities start at 2 a.m. Chicago time. And the market starts to rally. And this is the move that was expected back here. And it consolidated and it ran out of time, but it was expected to push back up into balance. The target above is the MCV to date, which is up at 94 here. So that's what we're looking for on the upside. The market's complying with that. The volume overnight is in line. It's steady at 113,000. Remember, 110 is about standard. Somewhere between 105 and 125 is normal, a tight normal range. And so we've got pretty good participation overnight, 113,000, and we're finishing up strong against the overnight high. And that's where we are currently. So trading 26.89. If you look at Bookmap on the overnight, you'll see it's fairly benign trade here, rolling up. You can see these big collisions here, but there isn't that much size in the book to collide against. So we're forming zipper breakouts, zipper breakout. So there's a zipper breakout. These zippers, as the market moves down, these zippers tend to act as temporary short-term support. So this area here, if you watch at the open, I would expect that 26.88 down to 26.87 or so will initially get some okay support before it starts to break through, if it is going to break through. So that's how we're set up right now. We're inside of that gap zone. Back to the current screen. We're inside of the gap zone. This gap zone here, if you're getting the flex levels, the IRT flex levels from my server, you've got this in there. It's still in play. We're still stuck in it. We're still trading it. So that gap zone comes from the 18th. It comes from Monday, the gap between Friday and Monday. And it was an empty area. I talked about it at length yesterday, so I won't repeat. But it's an unexplored area that now we're finding balance in. That's what we did yesterday. We found balance right underneath the midpoint of that range and started to dip into the Friday range. But overall, we're balanced. So when we look at, so let's get rid of this and let's pull this up front. When we look at this area, this is completely imbalanced now. So we can go ahead and draw, since the second day, since Tuesday, we can go ahead and draw a composite profile there. And we see that much of the volume is to the upside, but we're building pretty decent volume here to the downside. Double distribution with an LVN. This is a beautifully shaped double distribution here with a very, very clear break point at 26.93. This morning, the initial area that's expected to hold us back will be 26.93. That's what we're expecting. That may not happen, but I expect the market to rebalance the long inventory overnight, push back, consolidate, impulse up, 26.93, consolidate, and then get into 26.94.50, and then consolidate some more, and then potentially give us tomorrow to push into 2,700. If not, it'll likely be right after Christmas. I believe, if I'm not wrong, I believe the last 2 years, when it's normally quiet between Christmas and New Year's, the last 2 years we had a strong move that week on thin volume as people are on break. The market has actually run into the end of the year. We'll see if that happens again this year. Historic consecutive month ends so far in the ES, historic. And so if the S&P closes in this area, it will have closed, I believe, 12 out of 12 months higher, which hasn't happened in some time. I'm pulling this from memory, but I believe that's the case. Again, very strong market still. Now, that's my primary scenario. It's in a crowded area. Let me make that a little bit cleaner. There you go. So I'm looking for it to push to 26.93, 26.92.50, encounter some resistance, and then push through to 26.94.50. Consolidate. Probably not going to have the energy. If it's running like it normally runs, probably will not have the energy to push through the 2700, but who knows? We'll see, but I'm looking to the long side. What am I looking for? Again, let's go to the bookmap screen. What am I looking for? If I was to move this to the far right, what I'm looking for to execute off of that, just to be practical rather than talking theory and here's what I expect in 2020 hindsight and all that nonsense. What I'm looking for is for the market to open, for size to come in, for this area to turn brighter as we push into the 8:30 Chicago Open here in 10 minutes. As this gets brighter, I expect some brightness in this area. I expect the market to pull back, consolidate, and then I'm looking for these kinds of dots, strong lifts, right? Strong lifts, these kinds of dots that push us through, and then nibble away at this and push through. So my job is to see the quality of this down move, and if the down move occurs with big red dots, meaning strong execution, and it pushes through this area very quickly, then what we have is something similar to yesterday's open, which was similar to Tuesday's open. Yesterday's open was a lot stronger in the down move than the Tuesday open, but clearly the market's not able to sustain these prices into the end of the year. So, we're coming into the end of the year, very important time period, a lot of profit taking potentially as people book in their end of year performance. But overall, the market has some pretty good upside, in my opinion, still, and it's likely to push through. Once it gets into that 93 area, I expect some more white bars up here. I expect it to bounce off, pull back to the last zipper, wherever that forms, and then consolidate and then push through. So that's what it looks like. And I execute off of this platform directly, so I don't have to worry about looking back and forth. But it's helpful to see how the execution is likely to look like, rather than just speaking in theory. The secondary thing that could happen is an open test drive down through the range. The value area here is valid. Okay, and then we look for it to consolidate, and then we're looking for it to hold steady, much like it did yesterday, giving us another day of consolidation, and we're likely to shift the point of control down. Giving us fuel for Friday to make a move down or up. There's a lot of stuff that could happen to the downside. You can see how thin this composite is relative to other areas. So there's a lot that can be done to the upside, but it doesn't look like it wants to push through. So we'll see how that works out. But that's my secondary scenario right there. Okay, so that's it. That's what I have for you. I'm over my time again. Good luck today, and I'll catch you tomorrow. We'll see what happens. Take care.